Hello everyone, welcome back to Matt's Investing Corner. Quick question, how many sensors do you think are in a modern car today? Well, think again and think about that number in the next 5 years. How many sensors would a car have in 5 years? Because cars, multimedia, robots, factories and even hospitals are turning into data machines. More sensors means more data. And more data means one thing. You need chips that can move that data fast, clean and reliably. That's exactly where Valens Semiconductor, VLN is their ticker code, plays. And today we'll find out whether this beaten down stock of just $1 is a hidden winner or a value trap. So quick disclaimer, I own Valens Semiconductors. I've been buying more as it dropped in the recent months. So yes, I'm biased. And that's why I'm doing this video as a journey and not as a sales pitch. Here's the plan for this video divided in 6 sections. I want to explain what does Valens do in simple English. I want to explain the product portfolio. What are they actually selling? And the third part is the big trend. More sensors, more data, more connectivity chips. And fourth section is about the Q3 earnings. What improved and what didn't improve. And number 5 is talking about the risks. And I want to give you a quick technical review of the chart and where the stock currently is. And then the last part is basically my final conclusion. Do I want to hold this position? Do I want to add extra? Or do I just want to close the position anytime soon? So note, this is not financial advice, just my own research and my own opinion. And I want to share with you my journey into evaluating whether I should close a position or potentially should further build the position. And this is something that I will clarify in my final conclusion. So stay tuned. So Valens is a fabless semiconductor company. So what does that mean? So they design, develop and sell computer chips, but does not own the expensive fabrication plants, the fabs. Where they are made, instead, they outsource manufacturing to third-party foundries like TMCS. Their core idea is pretty simple. They build wired connectivity chips that move high-band data over simple cables, with the focus on very low error rates, long reach, and strong performance in noisy, messy real-world environments. And they describe themselves as the high-performance connectivity company. And they talk a lot about highest bandwidth, lowest error rate and longest reach. And that matters because in cars, factories and medical devices, connectivity is not nice to have, it's safety, it's quality and reliability. Now let's talk about the product portfolio of Valens Semiconductors. And just to be clear, I went through Valens' latest investor presentation and their most recent earnings presentations. So it's not just my opinion. This is a story the company is basically telling, but I'm translating it into normal human language. The easiest way to understand Valens is that they build chips that help move big amounts of data from one place to another over cables with high reliability. And that matters more and more today because the world is becoming a sensor and video machine. And more sensors, higher video quality, and more data is coming in. And all that data needs to travel inside devices, systems, vehicles, and without mistakes. Businesses and office systems, high quality video and connections. First, Valens serves the world of business systems. Think of conference rooms, schools, or big office buildings. These setups often need strong communications and connections for high quality video over longer distances. So Valens sells the behind the scenes chips that helps make those reliable video connections work. And in their latest update, they mentioned that this part of the business was performing very well. Second is the USB and everyday devices connections, more gear everywhere. So second, they focus on the world of USB connections and extensions. Now this sounds boring, but boring can be very profitable. Modern meeting rooms and workspaces have way more devices than before. Cameras, microphones, docking stations, touch screens, and it's all connected through USB. So Valens positions itself as a provider of reliable plug-and-play style connections for these high data devices. The key idea is simple. As video conferencing grows and workspaces become more digital, the demand for reliable data connections grows too. Third, cars. The big more sensors, more data trend. Now, the most exciting long-term part is automotive. Cars are adding more and more sensors every year. More cameras, more driver assistance systems, more safety features, autonomous driving, and the big issue is not just the sensors itself, it's the data that the sensors create. That data must move quickly and reliably inside the car in a very noisy environment with heat, vibration, and lots of electrical interferences. So Valens is trying to be the part of the data highway inside vehicles. This is the part of the story where the payoff can take time because the car industry moves slowly. But if this trend keeps growing and sensors keep multiplying, then the need for Valens type connectivity likely grows with it. Next is the industrial and factory automation. More factories are using cameras and sensors to guide robots, inspect products, and improve quality. This is the idea of machines that can see. And when machines can see, they collect a lot of visual data. So again, more sensors, more data. Valens positions its technology as a way to move the data reliably in industrial environments. And finally, medical. One of the more interesting updates recently is how much healthcare is becoming video-driven. In areas like internal cameras and medical procedures, image quality keeps improving. Higher quality means higher data. Valens is pushing into this area by supporting devices that need reliable, high-quality connections. And the company's story is basically healthcare is modernizing, more procedures are becoming digital and video-based, and that creates demand for better connectivity inside these devices. So overall, the portfolio is spread across 5 areas: business video systems, USB and device connectivity, cars with more and more sensors, factories with more automation and cameras, and medical devices with better imaging. Different markets, same core missions. Move more data, more reliably, with fewer errors, and this is why the more sensors, more data trend matters so much here. So let's now zoom out, because the real reasons Valens is interesting is not just what they sell today, it's the big trend behind it. The world is becoming sensor driven. Look around. Cars are getting packed with sensors, not 1 or 2, but cameras, radar, driver monitoring, and safety systems. Factories are also changing fast. More automation, more quality control, more robotics, more cameras watching production lines, and now we have a new wave: robots. More and more robots are becoming introduced in factories, warehouses, and even hospitals. And robots are basically sensor machines. Because to do their job, robots need to see their environment, understand the distance and movement, avoid obstacles, grab objects, work safely around humans, and that requires a lot of sensors and a lot of data. And here's the key point. When sensors increase, data doesn't increase a little, it increases a lot. Higher camera quality, more sensors at the same time, and more systems connected together. So the problem becomes, how do you move all that data fast and reliably inside a car, a robot, a factory machine, or a medical device? And in many real-world cases, you can't just hope with Wi-Fi works. You need stable, predictable connections. That's exactly the kind of problem Valens is trying to solve. So the investment idea is pretty simple. If sensors and robots keep spreading through the economy, then the demand for reliable high data connectivity should keep growing too. Now that we understand the big trend and why it matters, let's bring it back to the numbers and see what Valens actually delivered in their latest quarter. Q3 2025 revenue was 17.3 million, above the top end of guidance. They also said it was their 6th consecutive quarter of revenue growth, which is pretty positive. Gross margin was 63% GAAP, and they also show a higher non-GAAP number, and that's very strong. Their revenue mix is cross-industry business was about 75%, around 13.2 million. Automotive, about 25%, around 4.1 million. So right now the company is still mainly driven by non-automotive revenue. Auto is the long-term skill story. The cash balance is about 93.5 million, and they mention not having any debt. The business highlights they called out is the Pro AV demand exceeded expectations. Pro AV stands for Pro Audio Video demand exceeded expectations. Industrial machine vision milestone with the APHY platform. A medical endoscopy product launches. An automotive partner activity and standard ecosystem momentum. Now the but part. They are still losing money. Q3 net loss was around 7.3 million. Adjusted EBITDA was still negative, but better than what they guided. For Q4, they guided revenue around 18.2 million and 18.9 million. Gross margin guidance between 58% and 60%, which is much lower than the previous quarter with 63%. The adjusted EBITDA loss around 4.6 to 4.2 million in the minus. So the short version says growth, yes. Margins, decent, 60%. Profits, not yet. Here's what matters going forward. This is my checklist. First, revenue growth continues. Number 2, there's this VS6320 adoption. They talk about it as a key growth driver for video conferencing and extensions into industrial and medical. Number 3, industrial machine vision wins, because that vertical can grow without waiting years like automotive. Number 4, medical endoscopy progress. Especially as a single-use adoption grows, this could become a meaningful tailwind if they execute. Number 5, automotive design wins and production reality. Auto industry is huge, but it's very slow. So I want to see steady progress, not just headlines. Number 6, cash discipline. They have a strong cash position of 93 million, but I want that to stay strong while they are scaling in the next coming quarters. Now, let's talk about some of the risks as well, because we have to be honest about this investment. Profitability risks. They are still losing money. In the last couple of quarters, every quarter they were going down with around 4 million on their cash balance. Another risk is the execution risk. They have multiple verticals and means multiple moving parts. And that's something that I need to see to be proven. Another risk is the automotive timing risk. It takes long design cycles and it is slowly ramping up. Another risk is the competition. Connectivity is a serious battlefield between different companies and it needs to be seen if Valens can be competitive. And last, the small cap volatility. This stock can move hard on news and on sentiment, and that means moving up but also moving down. Now let's have a look at the chart and to see how the stock has been performing over the last couple of years or the last couple of quarters. What you can see is that in the recent months, the stock Valens Semiconductor has been moving downwards within this trend, and that started in August with a very strong deep fall where it was still traded around 340, and then it went steeply down, and then it went into a negative spiral downwards. And what you can see currently is that it has bounced on the level of 130, 140, 140, 38, 140 actually. And currently it's really testing this level. If this is able to hold, this is something that's going to be very interesting to see. If it can create a support level whereby from there on it can see where the stock can further evaluate. But one thing is that what I always look as well is, are the fundamentals changing? Is the company making more revenue? Is the company on a good path? And in this case, I believe they are on a good path. However, the stock is just not performing at all. And I recently bought some extra in the downward trend, but I need to be realistic as well. If this support cannot hold, then I might have to reconsider and start cutting my losses and start closing my position in this rather risky stock, as I see, the stock is not profitable yet, and it's moving very much downward in a lately trend, and I'm hoping that it will stabilize around this level, and the time will tell. Another thing that is a red flag is that it's moving well below the 50 and the 150-day moving average. And this is something that it's on a downward trend. These are three factors that is giving you a sign like, should you actually step in? This could be also a sign of a falling knife. Never catch a falling knife, they're always saying. But I sometimes like a bit of a risky move whereby I think, okay, this company has some potential. I do see the fundamentals that more data, more sensors is required. And it needs to be seen whether this support is holding, but I'm very curious how this will look into the next coming weeks. So here's my conclusion framework for today. What I do like. Well, I like a clear product portfolio tied to real trends. More sensors, more data is not going away anytime soon. It's only going to get bigger. Q3 beat guidance and margins were strong. Strong cash position and not having any debt. Multiple growth verticals from conferencing, machine vision, medical and automotive, all showing very positive signs. Things that I don't like are still not being profitable. Another thing is it's a small cap stock and there's pressure and weak sentiment on it. You can see that the stock is moving downwards, even though they recently published pretty positive numbers in their Q3 earnings. Another point that I'm not so positive about is their move into the automotive industry, which from what I've read is rather slow, and it takes time before you get full adoption, before you can scale such a solution. And this is something that takes a lot of testing. This we'll have to see if Valens is hitting a home run with entering this car industry, and if they can really succeed in selling their sensors. And so for me, as long as the revenue keeps trending up and we see real product adoption, I can justify holding or staying a bit patient a bit longer. However, if the growth stalls and losses widen without any progress, I will reevaluate my positions, and even when this hurts. So that's it for today. Drop a comment or leave a like. Do you think Valens Semiconductors is a hidden connectivity winner, or do you think it's a value trap? Well, thank you for watching and see you on the next one. Take care.